everyone. Today, our group will go over our first buy proposal in the financial sector. We are Jarret, Mila, and me, Tracy. The company we chosen are JP Morgan. They are in investment banking, financial services, consumer and community banking, corporate banking, and asset wealth management. Their key data are their CEO is Jamie Dimon. The headquarters is located in New York. Their industry is financial services. Their assets under management is 2.99 trillion. Their market cap is 478.55 billion. Their stock price is currently at 161.93 cents. Their beta is 1.12. A few of their key competitors are Bank of America, Morgan Stanley, and Goldman Sachs. In recent news, JP Morgan announced that they are investing in a blockchain company, Blockdaemon. The company is looking to get into cryptocurrency. Initially, JP Morgan was not into crypto at first, but now they are showing interest to expand their industry. This shows that JP Morgan has adopted a long-term strategy by taking steps needed to become a more competitive digital bank in the future. And now we will have Jarret to go over the financial analysis.
Hello, my name is Jarret Splendoria. I'm going to talk to you about the news and business strategy as well as financial analysis for JP Morgan. Recent news, JP Morgan Chase have been named the world's most important bank to the health of the financial industry. That's very good. JP Morgan announced investments in blockchain company Blockdaemon. The company is looking to get into cryptocurrency. This is just going to speak more towards diversification investments, as well as how they are allocating funds, which is a good sign for long-term growth, getting into what a lot of people think the future, where the future is going to be in investing. JP Morgan has adopted a long-term strategy, taking these steps needed to become a more competitive digital bank in the future, more something that is also going to look towards future growth and future stability and forward thinking. For the financial analysis, if you take a look at the PE, P2B, and market cap, all steadily going up until 2020. PE has only gone down in 2021, whereas price to book and market cap both went down in 2020 and then back up in their current 2021 numbers. Market cap is at an all-time high right now. It is a lot higher than many of its close competitors, which we think is good, and we think means there's going to be room for future growth above what they have now. Taking a look at liquidity, a lot of their debts have gone down. You look at total debt to equity, capital, and assets have all gone down. Means they're going to be a little bit more liquid than they were in the past, which is good. Is a good time to be liquid in the current market when they're going to need to maybe allocate funds in different places where COVID may still be having effects on current operations. When we look at their profitability, ROE, ROC, and operating margin, all steadily rising for the past few years up until, again, 2020, which is to be expected, but we'll see in the comparative returns, they've been doing very well overall and in recent years. So not something crazy to worry about. Also means they're going to have more room for return, and we expect them to bounce back well from that, as they already have started to do recently. Taking a look at the 1-year growth in millions, revenue remained fairly steady, averaging around 10 or 11 here up until 2020. Again, with everything else, operating income, employees, and dividends per share remaining fairly steady in growth up until 2020. There was still some growth in DPS in 2020, which is good. Means better for our investment. But this recent decrease also, we think, leaves a lot of room or a lot to be desired there, which is can be good for our investment now. Now would be a good time to buy in terms of we expect them to grow a lot more out of this moving forward. Now we're going to talk about comparative returns. We compared JP Morgan to the 500 index, financial index, BlackRock, and Goldman Sachs. Goldman Sachs is a much more comparable to JP Morgan itself, and BlackRock is just going to be one of the better companies in that industry of financial holding companies. You can see their price change was 105%, which is well over the index as well as Goldman Sachs over the last 5 years. Same with total return, very good returns over the last 5 years, up and above the financial index and Goldman Sachs. Again, they came up short against BlackRock, but that is to be expected as BlackRock is just a much larger company, much larger amount of assets under management and things like that to take into account as well. Now, Mila is going to take us through risk management and the rest of our presentation. Thank you.
So as we take a look at the raw beta, it is 1.192 shown on the right-hand side, and the adjusted beta is 1.128. And as we look from the years 2019 and 2021, JP Morgan's betas have been consistent and about in the same range from anywhere from about -3 to about 4. And that's been the main range that it has been shown as. So looking at the market multiple, the earnings per share is a 14.96, and the PE is 10.15, and that makes the intrinsic value of the target price $187.39. So our model shows that JPM is currently undervalued by about $26. In conclusion, JP Morgan is very stable as it is named one of the world's most important banks to the health of the financial industry. So it's an important bank that most Americans use, or anyone really in the world uses. And it has a really low beta, and it has consistent performance as shown previously in the risk management graph. The low beta could also result in less than desired performance, and our target price is $187.39, so we decided to buy this stock.